Welcome back to another edition of Special Situations Investing with Greg. This week I will be talking about a rights offering that is being offered by Capital Senior Living. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. In his book, You Can Be a Stock Market Genius, Joel Greenblatt tells us that we should buy all rights. Now, before you go out and just buy this company, I just want you to be aware that he says that in the context of buy all rights that are in connection with a spinoff, and this is not within the connection of a spinoff. So I just want you to be aware that this is not necessarily something that I am investing in. I just want you to be aware that this is a company that it just came up in my searching, and because of Joel Greenblatt saying that we should buy all rights, I constantly search for rights offerings, and this is one that came up, and I thought that it was a really interesting story to look at. So on to Capital Senior Living. So Capital Senior Living is a senior living company that provides homes for individuals that are getting into their retirement years, and it's had some problems dating back to about 2018. This company has, due to COVID, experienced a significant amount of liquidity problems, and the poor operating results, they didn't seem to, looking at their financials over the past year, it doesn't seem like they changed their SG&A that much in response to what was going on with COVID and their lowered amount of occupancy rates. And it just they got hit with a bunch of different storms in a bunch of different ways, and over the past 18 months they have really been beat down in the share price. If the company could return to its pre-COVID operations, it is something that provides a significant opportunity of upside potential, and it could be interesting to invest in. This is probably why back in the end of 2020, beginning of 2021, the company through one of the larger investment banks reached out to 33 different investors to provide long-term liquidity for the company, basically to fill the gap of some of the problems that they were having at the time of their peak occupancy rate losses. So basically their occupancy rate just kept dropping and dropping, partly because they had COVID, these fears about COVID, and so people were less likely to go in, and then they also had issues with probably some of their tenants passing away, unfortunately, due to COVID. So they probably just hit really hard with all the pandemic problems, and it's kind of sad to think of it that way, but this company, one of the reasons why they probably are struggling as much as they are is because there has been a shift in senior living because of what they were doing. Now, longer term, I think that there will be a time when people return to wanting to be a part of these senior living facilities. But at the moment, it seems like this is, parents are unwilling to go, and their kids are unwilling to send them in the current COVID environment. And I can see their occupancy rates stay low for a little while due to that. Well, of those 33 investors, about 6 months after they reached out to them around the turn of the year, of those 6 investors, the last one that's standing is Conversant. And Conversant Capital is basically providing a backstop and liquidity funding for the company. And if it goes through, they could have up to $125 million to go ahead and keep the doors open, per se, for the next 12 months. Common stockholders can participate in this rights offering, and their ability to basically, they can do a 1-for-1. Every share that they have, if they participate in the rights offering, allows them to buy shares at $32, or shares of CSU at $32 per share. Now, there's one sentence that causes me to at least pay attention to what's going on, and that is that there is an opportunity for oversubscription privileges in the SEC form that was released this week. I think Conversant is going to eventually take this company private based on the way that they've set this up, because or either that or they'll facilitate a sale. Because they are getting a significant amount of equity out of this, both through preferred and common shares. And the post-transaction position puts them at having, somewhere between basically up to about 60, almost 70% of the shares or of the voting rights of the company outstanding. I did because I think it's important to do, if you're getting into something like this, you need to do some longer term analysis of the company. And I looked back the past 5 years to see what kind of company this is. That they average about 40% on the return on invested tangible capital. Personally, I think that Conversant is getting a pretty good deal out of this. I think that they'll probably facilitate a private sale of the company over the next 2 to 3 years, or they'll take it private themselves. And at the price that they're getting, I think they'll do just fine. I did a calculation just because it's important. If you want to invest in a company like this, you have to see what the value of the company is. And I estimate that the price of this company should be about $55 a share, even with the dilution of the shares from this transaction. Now that's just my best guess based on reading the transaction, the SEC filing. And that also is based on a 3% growth rate. And that's a 3% growth rate based on their down year in COVID times. So a lot of opportunity right there if you're willing to have the intestinal fortitude to handle this one. But before you jump into this, and recognize I am not recommending this, and in fact, in full disclosure, I'm not intending to invest in this company at this time. But before you jump into it, just recognize that there is a significant amount of risk that's present in this transaction. So the first thing to understand is why did they even need funds in the first place? Well, they needed funds because they had poor operating, in my view, operating controls over time. And in fact, over the past 12 months, their SG&A, which typically ranged between 80 to 90 million over the past 5 years, has risen over the past 12 months. The trailing 12 months number is up to 93 million. And so they're basically just, they continue to have the same staff, even though their results have been horrific on the revenue front. And that tells me that management is unwilling to make the decisions, the tough decisions that sometimes have to happen during COVID times, and cut some of their sales staff. I get it. Sometimes you have to make sure that you're doing that, but they're making some decisions there that I don't know if I could agree with. The other thing that I don't know if I would agree with is that it seems like, and that goes with my projections, is that it's the labor cost with this company. So their labor costs continue to go down because they've sold out some of their poor performing properties, which I definitely recommend that they should do that, and I think that they are going in the right direction with it. But the problem is they have continued to do that, and their staff costs have they still have to pay their staff, and I think that staff costs over time may go up. And this is partly due to some of the increased wage pressures to go the other direction by employers, because they're competing with unemployment checks that are favorable to the employee. As Warren Buffett says, that I think CSU kind of got caught with that they were skinny dipping and the tide went out, and you can kind of see how this has affected their operations over the past 18 months. And this is a recovery play. It probably will do quite well. I think that the person that will probably do the best is Conversant. And thinking about that, Conversant they're going to be a shareholder with the ability to vote in whoever they want onto the board, and they will have a controlling interest in the company. And so if they have a controlling interest in the company after the transaction, I don't know how much they're going to be concerned about the smaller investor like you or I if we put money into this. And so yeah, you might do all right, but just recognize that they're not going to necessarily have your interests at heart. That being said, the management team, they also, as part of this deal, have done their best to make sure that they're taking care of their own personal their own personal golden parachutes in this. And so you can dig into the filing and you can kind of see how they're doing this. They do have the option that if they perform well and they get up to about $70 a share, then they get fully vested with their shares for their incentive shares in the company. So a significant amount of opportunity for Conversant and the management team in this, which probably will bode well for an investor, but may also not necessarily have your best interests at heart. I found this SEC filing to be extremely interesting to read, and one of the more interesting SEC filings that I've read for a while. And you can definitely take a look at it, dig through it yourself. Tell me what you think. Please share in the comments below if you find this interesting. I would love to hear your thoughts on this. I can't say that I'm convinced one way or the other on this company. I think it's interesting to look at. But that's as far as I'm going right now. Again, full disclosure, I'm not planning on initiating a position, and nor do I have any funds in this company at this time. Guys, tell me what you think about it, and we'll catch you next week. If you have not yet subscribed, please subscribe. It really helps out my channel. And also smash the like button if you like what you're seeing here. And we will catch you next week. Thanks a bunch, guys.